Good morning, boys. It's day 13 of the day trading apprenticeship today, and can't really start the day if my room is looking like this, so let me chime in and let me just clean this bitch. Boom, we are now live. I've now sorted the room out. You can't really be dialed if you've got a messy room, bro. You know what I'm saying? Trying to stay disciplined, trying to stay clean. You know what I'm saying, boys? Easy to let these things slide. But we're coming at it with day 13 today. We're going to be going over three things: pairs, risk, and data. These things all tie into each other. So it's absolutely essential that today we stay dialed and we lock in on what's important. So you guys see what pairs I trade coming into this, right? And I have so many questions that come my way, and it's the most common question: what pairs do I trade? What are the best pairs for futures? What are the best pairs for Forex? Give me the pairs, give me this, give me that. I don't know how the market is going to perform. How could I? Nobody does. So when you're asking me, what pairs do this, what pairs do that? How am I meant to know? I can give an educated guess and do what I'm doing based on my data, but there could easily be a pair that I'm ignoring that's performing better than the ones I'm trading. There could easily be a time where the pairs that I'm trading take a downturn and get slammed, and the ones that I removed go on an upturn and provide loads of R. So in this video, I'm going to provide you with the skills so that you can choose the pairs that you trade and the risk, because that's the second most common question. What risk do I do? What's the best risk? So then you can stop asking me to spoon feed you and you can just do it yourself, because in this series, I'm trying to make you an independent trader and not a dependent one. It's one of the core values that we have at TTC. It's building you guys up into the traders that you want to be. So you're not relying on my group. You're not relying on my education. You're relying on your own mind. And hopefully by the end of me teaching you, you can then maybe teach people, and you don't need me to give you this information anymore, because you'll have your own mind that will be able to determine these lessons and gain this knowledge on your own. So in terms of pairs, I'm just going to go through my data today, okay? And I'm going to break it down what this actually means, because a lot of you guys that have never seen data before probably don't know what this actually means here. So number one, in day trading, we think in terms of R. So minus 1R would mean that if I risked $1,000, I have lost $1,000. Plus 3R, which is in green, would mean that if I risked $1,000, I would have gained back $3,000, okay? So R is essentially whatever you're risking. So 2R would be 2 times what you risked you made. 1R would mean whatever you risked you made. And then minus 1R would mean whatever you risked you lost, okay? So this is my RR breakdown with me trading only US 100 and Euro USD. As you can see, the max loss streak that we had was a 5, technically a 6, but this wasn't a full loss. And then the average loss streak is about 4, I would say. Okay, the RR gain is 49.8. This is the session by session breakdown with wins and losses. Pretty similar, both have about 45%-ish win rate. And these are my trades, okay? Now, if we go over to global, this is the data of me trading every pair, okay? So this is the data of me in 2025 when I used to trade GBP USD. I've tried GBP JPY, I've tried gold, I've tried GBP CAD, I've tried New Zealand dollar. And what do you notice? You'll notice that the loss streak now isn't just 5. The loss streak actually opens up to 1, 2, 3, 4, 5, 6, 7 here. And even a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Technically a 9 because this wasn't a full loss, but a 9 loss streak. Another 1, 2, 3, 4, 5. Another 1, 2, 3, 4, 5, 6, 7. The theme here is, the more pairs you add into your rotation, the larger the potential loss streak is. Now, you're obviously going to catch wins. that's going to rebalance you, especially with a 3R model, a 7 loss streak, 2 wins, and you practically break even, especially if you use the trailing SL rule, which we'll get to at some point. But when you're trading, I don't want you to have this mindset that more is better. Everyone's always telling me, oh bro, should I add this into the rotation? Then I'll pass quicker. Should I add this? What about this? What about that? You don't need more than 2 pairs. Now, you can have more than 2 pairs, but you need to put them on separate accounts. But I'm not going to go over that today because that's too advanced for now. We want to keep it simple. Now, when choosing a pair, you need to collect data on this pair. You need to see what the average loss streak is for that pair. Then, if you're adding in 2 pairs, you add in the average loss streak from both pairs, and you need to see what would be the worst case scenario. The worst case scenario would be that both of those pairs sync up in loss streaks and you get double the loss streaks. Best case, the opposite happens with win streaks, okay? Now, when you're choosing a pair, there isn't just data that needs to be factored in. There also needs to be spread. Now, spread essentially, and we're going to go over to C-Trader now, which we set up in the early episodes. Spread is essentially the difference between the buy and the sell, the rate that you're getting on said pair. So let's say I buy in, right? I buy in here. If the spread is bad, it will actually put me deeper into my stop loss. So then instantly, instead of being break even when you place the trade, you're instantly maybe minus 10% into your stop loss. So if you're risking $1,000, by default, you might be minus 100 with certain pairs, high spread pairs. This could also mean that if price, let's put this in a different color. If price, let's say you're entered, okay, and you've actually been entered down there, but let's say you've entered and then price has come down. It hasn't hit your stop loss, but if the spread is bad, you could get just stopped out there. So you could get stopped out early. Or you could get stopped out at the right price, but in reality, you lose this, which would be more than you've allocated. So maybe you've allocated 1.1K on the trade and you would have lost 1.3 because the spread, yes, it stops you out at the right point on the chart, but it'll actually take you out as though your stop loss was further down, i.e. a worse price. This can happen in profit as well, okay? So you need to analyze the spread. Now, I'm gonna go through how to check for this. On C-Trader, if you see this gap here, this is the spread gap. So the equivalent would be on the low side. So if I bought in right now, it would actually put me up here. So I'd instantly be down. It would be harder to cover my losses straight away. Now, I'm going to give you a list of low spread pairs today as my offering to you. But what you need to do for me, and as you're offering to me, you need to collect your own data. Because this series isn't about me giving you all of my hard work and effort. This series is about me teaching you so you have the tools to create your own hard work and effort, to create your own data, to create your own insights. Like I've said, who is telling you that I have the best formula? I've built a system that is longevity proof. I've built a system that allows me to simply trade without hurting my mental. You might want to create more of an efficient system that is better than mine. You might want to create a more of an RR demon. You might want to create more of a high win rate demon. I have balanced in everything I know to create a system where I will never hate myself because all of the answers are predetermined. They are data backed, but there might be more efficient options out there. So I want you to go find those for yourself because I don't have all the answers. I just have the ones that worked for me and that allowed me to quit my full-time job at Rolls-Royce and move in Asia for the last year and whatever, year and a half, okay? I'm gonna give you a list though, as my offering, of all the low spread pairs that I'm aware of. Now, usually a rule of thumb is, the more popular a pair, the better the rates are going to be, relatively. Now, these are prop firm dependent, okay? But nevertheless, Euro USD, GBP USD, AUD USD, gold is pretty good, NAS 100 is good on some firms, bad on others. These are the ones I'm going to put here for now, these 5, okay? Now, this also matters on the time of the day. For instance, CHF-JPY has good spread for majority of the day, but in spread hour at about 11 PM, those spreads open up massively, which can affect your trading, okay? So when you're choosing your pair, you need to factor in these things. Here are some low spread pairs, like I said. You can go test these and see how you do. If you want to check the spread, obviously with a prop firm or your broker, you'd go in and you just see that difference between this gap here, okay? And the bigger the gap, the worse the spread. Now, in terms of tracking this, I would use something like this as a format. When you're tracking pure performance on the model, just keep it basic, keep it readable, keep it easily digestible. If you want to track more variables, then you can get a bit more advanced. I use Google Sheets for this, just really simple stuff, okay? Really simple stuff. Just create a nice table like this, use colors that are nice on the eyes, because if you're going to be looking at it for a while, it's going to be quite hard to see. What I've given you, whether you understand it or not, in these past 13 episodes is enough to collect data. You've got the timings, you've got the rules, you've got the bias, you've got everything with the mech model at least. We're not going to go over hybrid in this day trade and apprenticeship too deep. I might mention some stuff, but if you want to learn about the hybrid, there's more information in the TTC Discord, but I'm not going to be really covering that on here. I'm teaching you basically the full mech TNB model. There is another branch called the hybrid, which is a bit more advanced, a bit more of an experienced trader or someone with a bit more ambitious goals within trading would want to attack that. Really hard to learn relatively. Okay, but we just go more about that in the Discord, okay? On YouTube for now, we're just gonna focus on the full mech, but I've given you what you need to collect data. Now, to collect data, you probably wanna get TradeZeller, okay? I've been using TradeZeller since the start. For me, like, TradeZeller's been an absolute staple in my trading. It gives me the stats I need, gives me the auto journaling. It also has backtesting, which is what I wanna get into. So when you're backtesting, you need to have a software that can go back far enough, because on TradingView, even with the premium feature, you can only go back like a year on the 5 minute. So with TradeZeller, as auto journaling and as backtesting, it also has mentor mode. So if any of you watching this are getting mentored one-to-one personally by me, you know that I love the mentor mode, because we link up our journals and then I can see the trades that you're taking and I can micromanage you and obviously hold your hand every step of the way. What I want you guys to do is either get TradeZeller or TradingView Premium or FX Replay. TradeZeller is a bit more expensive because it has more features in it. Adds that journaling aspect in there as well as the backtesting, whereas FX Replay just does the backtesting. I've been able to graft a 20% off code on a month-to-month basis with TradeZeller to give you guys a discount. So if you use code Berg, all in caps, checkout, like I say, you don't need to use this, but it's what I use and it's what the team uses. You'll get 20% off every single month, so straight to the dome. I would recommend it. It allows you to not avoid your broken plan. Let's say we go into March. Let's say we click on this, here we go, yeah. Let's say this trade made $5,500. I can go into the attachments. I can look at why I took the trade, the entry, everything like that. Boom, there you go, okay? Now, and there was an account pass on that trade as well. This is really helpful. This is a game changer, okay? Going back to the pairs, linking in the data, just calculate the win rate. Some pairs might be unprofitable. Some pairs might be. There's not many in my opinion. Some pairs might be. Some pairs might be London session dominated. Some pairs might be New York session dominated. These are the type of things that you need to work around, because if you can only trade London session, then why would you trade a pair that's New York session dominated? Don't think that a pair is New York session dominated without collecting the data. Everyone says, why'd you trade NASDAQ in London? Bro, my NASDAQ London session win rate is bless. Do you know what I'm saying, bro? Don't take whatever people say as gospel. Collect the data yourself. Don't even take what I say as gospel. That's why I'm telling you to collect the data yourself, bro. So you can not believe me, go find out for yourself. Now, transitioning into risk, there is no one size fits all risk, okay? It depends on your goals, it depends on your bankroll, it depends on your mental, it depends on your tolerance. If you are poor and you don't work a job for some reason because you're lazy and you don't have much money to chuck at trading, you're gonna wanna do a lower risk because you can't afford blowing the account, or you're gonna wanna buy a lower size account. If, like a normal person, you work a job so you can put money into trading, you're going to want to go with a higher risk because you're going to pass faster. I personally, on evaluations with Forex firms, if they're a 10% to pass, I use 1.66% risk, okay? That means that with my model, I would need a 3-trade win streak to pass the whole account. 2 trades for stage 1, 1 trade for stage 2, okay? We're just going to focus on evaluation risk today, not the back-end plan, not the funded risk. Now, on futures firms, you don't get as much drawdown, but the profit target is also not as high. So for instance, on Top Step, I'm risking 1% on the 50Ks for a 1500 return for a 2-trade pass, because that's the max you can gain in a day is 50% of the profit target. So I'm targeting max. I'm trying to pass these as quick as possible. I don't care about burning accounts. I make more money on the accounts than burning 20. It doesn't matter, okay? You need to stop looking at these accounts like your baby, like a little pussy, bruv, okay? These accounts are consumable. Blow 10, pass 3, pay out 1. You've paid for all of it. Okay? Stop being a little pussy and crying like a baby when you pass these accounts. If you're going to do that, then do low risk. You can't handle high risk. I want to end this culture of crying when you fail accounts. Oh, I'm on a loss streak and I've just failed 3 accounts in a row. Quit then. Quit, bro, because we don't want you here. Go choose something else, or buy lower accounts, or lower the risk. You can't handle high risk. You want to accept the responsibility of doing high risk because you want to pass quickly, but then you can't handle when you fail it. Get out of here, man. I've had enough of people like that, honestly. Okay? So, if you can afford it, do the high risk. On Alpha Futures, the 0 accounts, they have no max win. So what do? I do a 2k risk on 100k. I do a 2k risk because you get 4k total, so I only have 2 trades before it's blown. 2k risk, pass it in 1 trade. 2 trade loss streak, lose it. I'm accepting that risk. Okay? So when you're choosing your pairs, when you're choosing your risk, number 1, the pairs. I'm going to recap now. Pairs, factor in when you're able to trade, what the spread is, what the max loss streaks are, and when you're trading multiple pairs, what is the worst case scenario if those pairs synced up on loss streaks within the last 3-4 years of data. Okay? With the risk, factor in, are you a pussy? Put your hand up if you're a pussy, okay? If you're a pussy, risk 1% on the Forex firms, maybe 0.5 on the futures, okay? And if you're a normal person who can actually afford trading because they know that it costs fucking money, funnily enough, then risk 1.66 on the Forex firms, because then you're going to reap the rewards of only needing 3 trades in a row to pass. And then you can get off that evaluation stage where you're making no money, and then you can actually be able to accept winning trades to make some money, okay? And if you can't afford to buy 4 of the accounts in a month, then don't buy that size, buddy, okay? Stop going so ambitious with the size. You're not going to hit a home run. With that all done and said, right, that's enough for today. There's enough to digest there. My homework for you is collect some fucking data on some pairs that you want to trade. Analyze the max loss streak on those pairs. Write up a worst case and a best case scenario with trading those pairs, i.e. if I was trading Euro USD and US 100, Euro USD in 2021 had a 5 loss streak and US 100 had a 4 loss streak, so the worst case would be a 9 loss streak. The best case would be both of them had 3 win streaks in a row, which would have made me X amount of R. Okay, the win rate in London session is this on this pair. The win rate in New York session is this on this pair. I should do this, I should do that. Collect some data, bro. Put in the hours. And if you're just watching this to get the strategy and nothing else, then good luck to you, my friend, because I've never seen those people win long term. You think I don't see people come into my VIP group, come into my inner circle, come into the TTC Brotherhood, where we're a tight-knit community. They come in, catch a winning period, make more money than they've ever made in trading, and when that losing period comes, they cry like a sorrow bitch, and they quit. Because they don't understand the data, and they think it's all sunshine and rainbows, because they've had a bit of good timing. Those people have come, and those people have gone, my friend, and I see it day in and day out. We've got a really good group of guys now, but about a month or 2 ago, it was a completely different climate, okay? So, with that all done and said, everything you need to know is in the description. You know your homework from me. Keep grinding, stay positive, and you can do it, bro, okay? Peace out.